Welcome to Java. Thank you kindly for joining me. It's April 16th, 2025. It is also Wednesday. And before I get started in here, first off, welcome if you're new. But secondly, I would like to thank those that go above and beyond in supporting this show. There's quite a few of you, but I'd really like to thank Doug and also Marilyn. Thank you for your contributions. And Chained God, who also keeps Discord pretty much in line for us. We are going to have a discussion this evening, and that kind of opens things up because censorship here has been really difficult lately. I've seen quite a few more things coming in and kind of battling against the artificial intelligence movement that more and more are using here. So even just hitting the like really helps, as well as all of you that are here commenting every day. I appreciate you tremendously. It's keeping this on, I believe, because it's not necessarily easy all the time. So I'd just like to thank all of you for that. With this, we will be having that discussion to where I'm not so careful about all of the things that I have to say now. We've got options expiry this week, and it is a shortened week. I'll cover that. But before I do, let's get started with the market where it stands at this moment. So we've got a fear grade meter is at 19, slightly lower than yesterday, heading back into the extreme fear territory. So daily driver at this moment is kind of chop. As I said, the options expiry is Friday, but the markets are closed for the holiday. We've got a short week, and this also raises another concern for what could be going on geopolitically into this weekend. So could cause a lot of shift, if you will, prior to the market open next Monday. I'll cover on the weekend, but if you're closing out positions or trading, watch it for your Thursday tomorrow, which means your positioning starts today at least. Now, we've got quite a few things going on in the background. And first off, I'm going to go ahead and talk about this early before hitting the stats. There is another economist, he's actually Pakistani, with an article that came out about dumping United States debt, meaning selling off the treasuries. That is a double-edged sword, and I thought it was very well written, and I agree with his position. He clarified some of the issues with doing this. But now he had Scott Bessent, who is US Treasury, coming out and saying this directly, that China will not weaponize US treasuries, meaning selling them off in order to hit the markets, because we do buybacks. That is a quote from him. And what this means is that the Federal Reserve can print the money to purchase back, unlike any other country in the world, simply because the United States has the reserve currency. So while the dollar is incredibly weak, everybody's dumping US dollar assets, it's going to be a while simply for this fact alone. This is a massive backstop that they've got now. He's saying China can't sell the treasuries to destabilize the financial markets because it would affect their currency now. While they are decoupling with the BRICS and other payment systems, this is still true for this moment. And for a bit of the future, they are also backed by the military. So, large understanding here. Don't panic and get out of the dollar. Why am I saying this now? This should affect your trades forward. So, with this, taking a look at the 10-year yield is going back down. Now, the yield spike is when they're selling off. So, we've got either purchase buybacks, which I believe is shifting in from the larger money, meaning hedge funds and pensions, going back into bonds. Now, this is not just US 10-year, but also Europeans' own debt is also being purchased. Now, we've got the dollar is still incredibly weak, below $1, below 100. So 99.57 this morning, and still getting weaker. It's facing some headwinds, overhead resistance. However, there's a couple of other things that are going to affect this. We'll watch before. We've got cryptocurrencies bit weak this morning. Bitcoin's still above the 82,000 level. And all of these could shift on one thing happening. For instance, if China and the United States come to an agreement, they have a phone call, and all of the trade deals are made good, these stocks are going to skyrocket. The market will take off. So at the moment, very weak, chopping right now, showing weakness for the future, telling this coming in. Now we've got gold, record highs again, and the volatility index is up. So this is fear. A lot of fear trades, purchasing back into bonds, gold going up. Oil is getting a bit of strength on the thoughts that there are talks also in line with Iran. Now, if the peace deal is reached with Iran, gold could recover despite the demand issues as well as the talks with China. So we've got the safe haven assets are still up this morning. And I want to warn on this as well. Gold is going a bit parabolic, but that normally happens before there is a sharp correction. So at 3,319 in the futures, 33.22, these are all-time highs for gold, but it's hitting serious resistance overhead. So could it continue? Yes, these are simply probabilities. Want to go over what's going on with the calendar now. We're getting a few reports this morning. Tomorrow, prior to the market opening, jobless claims, that's going to be a large one. Housing starts. Now, we did have mortgage rates are going back up, and we've got a few things happening in the real estate sector I'll have to cover soon because that does affect the perceived wealth effect is what it's called, and that affects the consumer and how much they are willing to spend in the United States. They are the global consumer, so it affects all markets. Now, with this, we're getting these numbers prior to the market open, but we've got a few other things. As I was saying, rates coming down a little bit softer across the board, not just United States, meaning there is buying of debt. China is looking at possibly issuing more quantitative easing, more debt. They have said they're open to chat so long as President Trump does it in respect. That is huge to them in their culture, and it is a requirement regardless of the pain that they would feel. So very different there. He did raise the tariff rates 245% right now. So not going well at the moment, but this is the final shove to close that door and make them knock and kind of open up these chats. Now, this is a psychological game, as a lot of things are. And I think that if it's that game of chicken they're watching, who flinches first. United States still has quite a bit behind it. Now we've got Palantir is up. And as I say here, shop responsibly. I've been talking about how we're going to have this correction incoming, whether it's right now, could reverse for a short period of time. I still believe that's the case, despite what's going on. Now, with this, you should start your shopping now. That means doing your due diligence on companies, assets that you want to own, whether it's real estate or whether it is stocks companies going forward. Okay, now I do expect sharper decline later this year, and this is going to be critical for your success a little bit later on for the long term. Now we've got Google in the news because they were fined by the UK for their abuse of dominance. And then we've also got Nvidia is also down this morning as the United States is kind of cutting their artificial intelligence chip sales to China. So Nvidia really hurting this morning. Also, they dropped on this announcement, and semiconductors also hit after hours yesterday in the NASDAQ futures. So that's bringing tech sector down. Yesterday was chop day, ended weak. Now, I'd like to say that people don't think much about risk when the market is going up. And then they make terrible decisions when the market is crashing. They sell at the weak points, which is the opposite what you should be doing. Now, we've got Chinese Post now suspending sea mail to the United States, and they're going to be halting airmail services for containing goods from starting April 27th. Now, this is assuming that the trade deal talks don't happen and are not successful. So all of this could reverse really rapidly. But as we've had Daniel Kahneman was the one who said humans are more motivated by avoiding losses than by seeking gains. This is very true. So this a very humanistic thing, but it's very difficult to go over. But being contrarian can also pay off very well. And in the words of whether you think he's great or not, Baron Rothschild, back from the 18th century, saying the time to buy is when there is blood in the streets, even if the blood is your own. Now, we're not quite there yet. I do believe we're going to see that, and you want to be ready when it does. Now, a little bit of a touch on gold. This is just a visual in the charts. The S&P 500 is back from 2000 to current on showing this spike. Now, kind of due for a correction, but we'll see. Nothing is for sure. With United States stocks falling as bank earnings are continuing. Now we're getting more banks in today. They're calling it the year in fear. I think there's more to go here, but just a little bit of the background for that. Now I want to talk a little bit about where all of this is going and why. Talking about the trade war could weaken banks, regulators, and competition. Okay. The tariff regime and resulting price shocks could put additional pressure on small banks, requiring already an undermanned FDIC to turn to assist merger and acquisition deals to resolve failed banks, accelerating consolidation in the industry. I've already spoken about this before, that this would be the trend for this year. Our banks, smaller banks in particular, medium banks going out of business, fully shuttering merge and acquisition, which means going into or being purchased by larger banks, and only the larger banks will prevail. Now, the larger banks will go digital. This is all by design. Now, all of these seem like they're unrelated, but they're very much related. Second part of this, modern fraud prevention, pardon me, I can't speak this morning, with cloud-based artificial intelligence accelerated workflows. Now, reducing risk with end-to-end artificial intelligent workflows for fraud prevention. But what does this mean? The base of this just means that they are filtering everything through artificial intelligence. How do they do this? All of it will become digitized, 100% of your currency, not just your currency, but all of your assets. Cloud-based, on the internet, no escaping this. Now, how do they reduce this risk? Well, this is the third part of this. They're coming out with Real ID in the United States. Now, if they are going to prevent this fraud, they must know who you are and everything about you. So May 7th, they're requiring, and this is for travel, in order to board domestic flights and access to certain federal facilities. So not just travel, but they're putting in what they call this Real ID. So it's supposed to be this good idea to where they have verified who people are, but this is also going to control your movement, access to facilities, and more. So crypto lending growing. These banks are going to be replaced. This is the movement happening right now. Everything getting digitized. We are in this push and everything will be controlled. I know this sounds tinfoil. We're moving toward this at a rapid pace. So just to be aware, get assets that move outside of the system. If you want to know more, feel free. Leave a comment, send me an email, or join our Discord discussion. Last thing I'd like to hit on, this is part of the other discussions which seem to be outside of the financial sector, but they're very much not. All roads lead to war. If they can't get you to come in through the traditional methods, then they'll cover it with war. We've got Israeli Defense Minister saying that troops will remain in Gaza, Lebanon, and Syria indefinitely. So this whole push is a bit more of a land grab, and also a few other things going on as far as repurpose and restructuring, as well as bolstering particular companies. Now, in this push to get them to do what they want them to do, this kind of another move, if you will, similar to the tariffs, no aid for Gaza. So they're blocking all humanitarian aid in order to pressure Hamas, is what they're saying, until they get them into these ceasefire talks. And confirming, this is the important part, they're going to maintain what they're calling buffer zones and hold seized areas. So a lot going forward on this. We are getting quite a bit more censorship. I'm seeing more things happen. I'm getting really discouraged as far as what I'm seeing a lot of other YouTubers out there, people that are getting the truth out there, being suppressed. So with this, I appreciate you all being here. And until I see you again, my friends, stay free.